Good afternoon, students. We are continuing with the public finance topic, which we had just started and we had not completed in the previous class. The topics which we had covered so far were about the national income and about the growth and development. We recall back our the last class study. I think we studied about the different developmental indicators, and we also studied about the Lorenz curve and Gini index. If we recall, like Lorenz curve was used to measure the income inequality, and Gini index is a measure which will be giving accurately the value for the level of income inequality. So after studying that, we moved on to this public finance class where we had just said about the budget. We are actually trying to study about the government. When we study about the government, there are two things which we are going to study. One is about like how the government is earning money, and another one is how the government is spending the money. So these are the two aspects which will be presented through the budget also. So we said like the budget gets presented nowadays at the end of January, and it is being presented for the upcoming financial year. And if you recall the estimates of whatever we had mentioned, we said like if we are in the month of January 2020, the budget will be presented for the upcoming financial year, which is from April 2020 to March 2021. So that we called it as budget estimate. And when I am in the month of January 2020 presenting the budget, I can also give a revised numbers for the current financial year. So the current financial year will be from April 2019 to March 2020. So we are going to give a revised estimate. And we can also give the completed financial year's actual data, which is April 2018 to March 2019. So these are the 3 years for which the budget is going to present the data. One is for the future and the upcoming year, which will be called as the budget estimate. Again, the second is the revised estimate for the current financial year and the actual data for the completed financial year. I think with this only we stopped the previous class. In today's class, we are going to see one major thing. There are 2-3 parts what we are going to study to public finance. One is about the basics which we are going to start today, which is about the budget's structure. We're going to learn about the different accounts of the budget, and we are going to learn how the government is earning and it is spending under the different headings. That's the first part. The second part will be about the policy, which we are going to call it as the fiscal policy. We're going to tell you what is fisc and what is fiscal, all those things. So we are going to study about the government's policies and as well as some extended measures like how do we tax the foreign inflow and those kinds of extended policy measures. The third thing is we are going to study about the public debt, which is about the borrowings which the government is doing. So these are the 2-3 major things which we are going to study with the public finance. And there is one more topic along with the public debt, which will be about the finance commission, which you would have already studied as part of your polity class. We are going to teach the Finance Commission and its role and how the sharing of the taxes are happening between the central and the state governments from the economics point of view, right? So with that, the public finance will be over, after which we can slowly move towards the money and inflation class. So let's continue with the basic structure study of the budget. So we are going to start with the different accounts on the budget and study about it. Even before going into it, we want to say about the word fisc or the word fiscal. Totally, the budget actually can be called with the word fiscal policy, right? As economic students, we have to be very, very clear about the terminologies what we make use of. So never call this fiscal as physical policy. So it's very important. Please remember this from today. Fisc means treasury. We want to tell in like in a very simpler way, it is the gajana. It's the locker of the government. So the gajana or the locker or the treasury of the government will be filled when the government is earning the receipts. And from the locker only you are going to take the money and then spend. So the government's earning and the government's spending, both of these things are going to be talked from the perspective of what is happening to the treasury of the government, whether it is earning more or whether it is spending more. So therefore the word is going to be coined as fiscal policy. So any activity which is concerned with the government's earning or government's spending will be called as fiscal policy. So let us first of all study all the components, how the government can earn, how the government can spend. Once we are done with all the items and the components of it, then we will overarchingly tell how the fiscal policy is functioning. But when we talk about public finance, the economics terminology for it is fiscal policy, right? Again, when you study public finance, there is one more perspective which we all have to remember. See, we are coining the word public finance, right? So here, the public word is actually representing the government. So what about the financial activities of the central government or the state government? That is what is the perspective which we are going to tell. When you hear to the word public, here don't assume the word people, because we are going to give another name for the people's activities. People financial activities. People means you and me. What are all the financial activities of you and me? We are going to call it as people's financial activity in a different way. So as of now, when you are talking about the government, it is going to be called only as public finance, right? So now we will go and see the structure of the budget. So this is the structure for the budget. We can see that there are two major accounts in it. One is the revenue account, another one is the capital account. So first, let us give the differences between these two accounts. Then you are going to see that there are two commoner side headings for the revenue account as well as the capital account, which is the receipt side, and then the expenditure side. So first, let us give the difference between this revenue account and the capital account. Budget is for the central government. What we are learning today corresponds to central government. We are not studying anything about state government's budget today. There are differences between these two things. What is an expenditure for the central government can become a receipt for the state government. So I'm not teaching you anything on the state government's budget today. We are going to learn only about the central government's budget, right? So now budget is on the top. It is having two different major accounts. One is the revenue account, another one is the capital. So now government has to run the country. You know, government has lots of activities to do. It has to do the routine administration. It has to collect the taxes. It has to do the programs, implementation of schemes. It has to give subsidies. So there are varieties of things which the government is doing. Now onwards, whenever you want to say the government is doing a particular activity, that particular activity is going to be fitted inside the structure. So we are going to say the activities of the government in two different headings. One is the revenue account, which is going to be made use of for the day-to-day routine business administration of the government, right? So if you want to give a very simpler example, assume like Shankar IAS Academy is there. Shankar IAS Academy will also have two different activities. One will be day-to-day routine running of the business of the academy. Number two, there will be certain kind of capital expenses, which is for the infrastructural development or for the expansion of the academy or for buying some capital equipments, all those things, right? Similarly, we are going to tell to the government. The government has to run the routine business. This is to run the business of the government. There are lots of routine administrative expenses that is coming under the revenue account. This will also be recurring in nature. What is recurring? It will be repeating. Every month you have to give salary. Every month you will be collecting taxes. So there will be a frequency with which this revenue account will be operationalized, right? And it will be comparatively smaller in magnitude. Comparatively, I'm not saying on a holistic manner. So this is going to be smaller, this is going to be recurring, and this is going to be required for running the business of the government. This is what is the requirement or the description of the revenue account. Then what is capital account? Capital account is going to create physical or financial capital for the country. It's going to deal with the capital. What do you mean by capital? It could be a road, it could be a rail, it could be the power plants. So it is the creation of the infrastructural facilities or the developmental facilities for the country, right? So mainly we are going to say this will be less frequent in nature. What is the meaning of this? We can't say that every month the government will be doing a similar kind of a capital activity or a developmental activity. There will be activities happening as and when it is required. If in a particular district you have to lay a road, once you lay the road, the work is completed. It's not going to recur again and again over there. Once the road establishment is completely completed in the country, like in the most of the places we have got a very good road facilities, then we are going to do something else, not the road thing. So it is basically establishment of the infrastructure only, but we can't predict the frequency of this. Some months we spend more, some months we spend less. So it is less frequent, or it is in a irregular fashion. It is not in a very recurring fashion, as we are going to talk about the revenue account. Then the third thing is, usually it will be bigger in the magnitude, because we will be spending more for development of the infrastructural facilities. So the amount which is involved in doing the capital activities will be more. So these are all some of the basic things which we can describe the revenue account and the capital account. Revenue account is for running the business of the government. Capital account is for creation of the physical or the financial capital in the country. So these are the things. Now let us come under the revenue account. So what we can do is, we will first study the revenue account. We will study the receipts, expenditure and all the components under it. Then we will move on to the capital account, right? So we are going to go from the left hand side to the right hand side. We are going to study in this particular fashion. We are going to like first finish the revenue account. Then we will go to the capital account, right? Is there any doubt you want to ask about the revenue on the capital account? As I tell you more components about it, it will become much more clear, right? So now let us deal with the two major headings, which is revenue receipts and the revenue expenditure. Am I visible? You're able to see me and then listen to me clearly? Is there any difficulty in that? Yes, you're able to see me and listen to me. Okay. So now what we will do is, we will first study the revenue account. So here we are going to say the revenue receipts and revenue expenditure. I told you revenue account is like running the business of the government. So now let us assume like what are all the different businesses of the government. There are lots of administrative activities which the government is taking care of. There are lots of ministries. You know, for every developmental activity, for every infrastructural developmental activity, for every welfare activity, for every training activity, there are so many ministries and there are so many departments and the divisions by which the administration on the implementation of the various policies of the government is happening. So here, when we say like this, we have to first understand by running the administration of the government, how the government is earning, which is what the first thing which we are going to see, which is about the receipts side. Then we will see by running the administration, how the government is spending. So when you talk about the earning part of the government, there are two major headings in it. One will be called as the taxes. Another one will be called as the non-tax revenue receipts. So these are the two major ways how the government can earn. So now what we will do is, we will get into the two major headings by which the government is earning on a recurring basis and by doing the business of the government. We will describe all the types of taxes, the major types of taxes and the non-tax revenue receipt for the government. Then we will come to the part how the government is going to spend under the revenue account, right? So when you are saying the revenue receipts, you are seeing two major headings. One is the tax receipts, another one is the non-tax revenue receipts. So now what we will do is, let us talk about the tax receipts, then we will go on to the non-tax revenue receipts. It's not clearing. Is it clear? So now we are going to study about the tax receipts and then we will move on to what is called as the non-tax revenue receipts. How do we define tax? First thing, you can write in the chat box if you want to. I want to listen from you. How do we define tax? You all would have studied so much about GST and several other taxes. Just tell me if you have heard about the different types of taxes. In a layman's terminology, how do you want to define tax? Income tax is an example. It's a compulsory levy on people's income. So we are going to make use of this particular word. Tax is a compulsory levy. The word compulsory is going to tell you that you don't have a choice. When you are earning income, you have to pay the taxes to the government, right? Money to be given to government as form of responsibility. This is the reason why we have to give it. You are saying, I am earning income. From a part of my income, why should I pay compulsorily a tax to the government? Why should I do it? Then we are going to say that the government gives a lots of facilities for you to do that economic activity. Assume that we are running Shankaray's Academy in 12th Main Road, Shanti Colony, Anna Nagar. There is a building over here. But to this building, there are lots of the government services which we are depending upon, like the electricity services, like the water services, like the permission obtained in order to do this construction, like the road facilities through which the students are reaching to our academy. So this is all like the responsibility sharing by the business people to pay, and whoever it is, whoever is earning an income, if they are earning a particular amount of income and above than that, we have to pay the taxes to the government. So tax is a compulsory levy which will be paid out of your income or out of your profit or by the consumption of the goods or services. We are going to tell you all the different types of taxes today. It is for us to first of all understand and put these two words into your mind. The moment you hear the word tax, now onwards you have to remember the word compulsory levy, right? Now we have to say, when we talk about the tax, two key words. One is called as tax base, another one is called as tax rate. What do we mean by tax base and rate, right? Tax base means, say for example, if we talk about the income tax, the simplest tax, let us take it. We will ask ourselves a question. Who has to pay income tax in India? Do we know any idea about this? Who is paying income tax? We have to earn a minimum level of income. And if we are earning more than that minimum level of income, the threshold level of income, we have to pay the income tax. Can you recall any numbers, any year's numbers? Who is paying income tax in the country? People above 5 lakhs as income tax, above 2.5 lakhs. Yes, about 2.5 lakh rupees if you are earning per annum. I'll tell you an example. Assume I am earning 3 lakh rupees in 1 year, which means first 2.5 lakh rupees they will exempt from the income tax. The rest of that 50,000 rupees I will have to pay the income tax. I hope I was very clear in what I told you. If somebody is earning 4 lakh rupees, first 2.5 lakh rupees will be exempted from income tax. 1.5 lakh rupees you will have to pay the income tax. I'm going to tell you more about the income tax after we finish the topic on this definition of taxes. So what are we trying to tell here? In India, all the people who are earning more than 2.5 lakh rupees per annum are liable to pay the income tax. This is how we are going to describe it. So those people who are above this 2.5 lakh rupees will form the base for the income tax. Farmers are exempted, agricultural income is exempted from taxation. I will tell you those details as we go ahead with the types of taxation. As of now, I am telling you all the population who are earning more than 2.5 lakh rupees. It is the cost to the company. It is not the base salary, the gross amount, whatever you are receiving, right? They will be exempting some of the things in that. They may allow you to detect the HR. Those things I'll tell you when we get into the income tax. As of now, just keep the total salary what you are receiving from a company. If it is above 2.5 lakh rupees, all the people who earn more than 2.5 lakh rupees per annum will have to pay income tax, right? So that is what is called as base. What is base? Who is eligible to pay a particular type of taxation will form the base for that particular taxation. So what I told you right now is for the income. Now let us tell about your particular case itself. Assume you people have paid like 1 lakh rupees for the GSPCM and you have enrolled with us. When you paid the taxes, you have also paid the GST along with it. I'm going to tell you about GST today. What is GST? GST is Goods and Services Tax. So we said like you have to pay 18% of the fees amount as the taxation. So we have collected that 18% also from you. So all the students who are attending the class today with us in the academy, we are going to say you are all the tax base for the goods and services tax. So the base means who is paying a particular type of, who is eligible to pay a particular type of taxation, they'll form the base. So all the 100 students in a particular class, they are the base of GST. All these students who are earning more than 2.5 lakhs per annum will become the base for the income tax. So for every type of taxation, the base will differ. But I hope you are clear with the word base now. Right? 1.5 lakh for income tax out of 4 lakh income, really, ma'am, or it's example? No, if you are saying 2.5 lakhs is the minimum threshold, anything you earn above it, if you are earning 4 lakh, for that 1.5 lakh rupees only, they will put the taxation. I'll tell you the rates will be different. Above 5 lakh, the rate will be different. Above 10 lakhs, it will be different. Above 30 lakhs, it will be different. But 2.5 lakh, first 2.5 lakh earnings will be exempted from taxation. Right? All the types I'll tell you. As of now, I'm only trying to tell you the meaning of the word tax base. The second thing is we have written as tax rate. What do you mean by universal? It is whoever is consuming a good or a service will become the base for GST, because GST is on the consumption of the goods and services. So if you consume a service, if you consume a good, you become the base for it. That's the meaning of the word base. Now the rate. What do we mean by the rate? Rate is a percentage, right? How much percentage of income tax should I pay? Is it 5%? Is it 10%? Is it 30%? What is the percentage which I have to pay? That is called as the tax rate. If we are talking about GST, are we paying 5%, 12%, 18%, 28%? So a particular percentage upon a particular good or a service will be called as the tax rate. So now we are going to tell the tax base and tax rate in a particular way. Who is eligible to pay will be the tax base. How much is he paying will be the tax rate. I hope we are clear with these two terminologies. Now we are going to tell the 3 different principles which we need to know about the taxation. One is progressive. 2 is proportional. 3 is regressive. These are the 3 words, principles which you need to know to generally understand about the different types of taxation in our country. First is the word progressive, then the proportional, then the regressive. What do you mean by progressive? If you are generally talking in an English word also, you can understand that progress. I am progressing in my life. I am becoming better off, right? I am becoming, I'm earning more and more. Something like that. Progressive is a very good concept. You are becoming better off day by day. So this principle is also going to tell you that as the income level is increasing, it could be the profit, it could be the income, it could be your consumption, whatever it is. As your income level is increasing, the tax rate, I hope we understood what is the rate. Rate is like they may be living on the percentage basis. The tax rate will be increasing. As the income level is increasing, tax rate will also be increasing. If I am earning 2.5 lakhs to 5 lakhs, maybe I am paying 5% of my income as the income tax. If I am earning 5 lakhs to 10 lakhs, I have to pay 10% of my income as income tax. If I am earning more than 10 lakhs, maybe I have to pay 15% or 20% of my income as the income tax. So as the income level is increasing, the tax rate is increasing, we are going to call it as progressive type of taxation. Are we clear with the word progressive? Now we are going to say the second word, proportional. What do you mean by this word proportional? Whatever may be your level of income, I am going to collect a constant rate of taxation from you. What is the meaning of that? Usually, this proportional taxation will be going for the profit taxation. Assume our academy is being run, or a particular business is being run, a company is being run. The company can be earning the profits as 3 crores, 30 crores, 300 crores, 3,000 crores, whatever may be the amount you are earning as the profit, the government is going to tell them to pay 30% of that profit as the taxation. In that case, the 30% is going to remain the same, whatever may be the rate of the tax, rate of the profit, whatever may be the level of the income, right? Even if the income level or the profit level is going on increasing, the tax rate remains the same, meaning the 30% remains the same. That will be called as proportional taxation. Follow? First case, in case of progressive taxation, we said as the income level is increasing, the tax rate is increasing. Second type, proportional taxation, we have said that as the income level is increasing, the tax rate is remaining the same, which is proportional. Now, if we know what is progressive and proportional, we should also be knowing now the meaning of the word regressive. What can be regressive? As the income level is increasing, the tax rate is decreasing. Now you will be asking a question to yourself. How come when the income level is increasing, the tax rate can be decreasing? Is it possible to do like that? Is it logical to do like that? Is it rational to do like that? It is not. But we have lots of examples to quote for regressive type of taxation also in India, right? So we will tell you the examples as we go ahead with the types of taxation. Now, so far I have told you 6 terminologies. One is what is tax, you need to know. Then the word tax base, tax rate. Then the 3 principles of taxation, progressive taxation, proportional taxation, and regressive taxation, right? So once we know all these concepts or the basics and meaning, now we can get into the types of taxation. First type is direct taxes. Another one is indirect taxes. Somebody is asking regressive taxes. You have to put just opposite to the progressive. What is progressive? As the income level is increasing, the tax rate is also increasing. Now we are going to say for regressive, as the income level is increasing, the tax rate is decreasing. You may be wondering whether this will happen. Yes, it do happen. We will explain to you with examples how some kinds of taxes are actually putting higher burden on the poorer people. So that's how we are going to understand the regressive taxation. I'll tell you the examples and explain, then you will follow it. As of now, are we clear with all these 6 words? Now we can go ahead with the 2 types of taxes, the direct taxes and the indirect taxes. Right? Shall I go ahead? Shall I go ahead? Are we all following? Okay. So now we will say what is direct tax and what is indirect tax. These 2 types of taxes, we have to give one example at least to explain it. What is a direct tax? I am a person, I am earning 5 lakh rupees per annum. The government is asking me to pay the income tax out of my income. You know, first 2.5 lakhs I will be exempted. Then the rest of the 2.5 lakh rupees I have to pay the income tax. So when the government is asking me to pay the income tax, I pay the income tax out of the 5 lakh rupees to the government. This is direct. What do you mean by direct here? The burden of the taxation. Burden means I am paying. So it is a burden for me. So the burden of the taxation falls directly on me. Government is asking me, I pay the government. So it is direct taxation burden upon me. Then what could be indirect? Now we are doing this business of providing the educational services, right? Now there are 3 layers which you need to understand. Assume there is a government above me. I am the business running person. You are all consumers. What are you all consuming? You are all consuming the educational services here. So what do? As a business person, I collect the fees from you. I collect the GST from you and I give it to the government. So as a consumer, you will have to give the consumption related taxes to the government, but you are submitting the tax to me and I pay the government on behalf of you. Here, when the government is asking us to pay the GST for the services, whatever we are rendering to you, the consumer, you pay it, I collect it from you and I give it to the government. So it becomes indirect. You're not paying directly to the government. Instead, you pay it to me and I pay it to the government. Yeah, clear? So here it's going to be called as indirect because the taxation burden is shifted from the business person to the end consumer. It is universal to all the businesses. If a Santosh supermarket is selling this pen, if I am the shopkeeper of Santosh supermarket, I sell the pen to you, you buy the pen, you pay the tax on it. So I collect the money for the pen, I collect the tax from you and I pay it to the government. So when the government is asking me to pay the taxes for the pen, whatever I sold, I am going to shift the burden of the taxation upon you, collect it from you and I will pay it to the government. So in this sense, it becomes indirect taxation. But if the government is asking me to pay the income tax, I pay it directly to the government. In case of indirect taxes, the end consumer is going to be the person who will be bearing the burden of the taxation. Are we clear? So when the taxation burden cannot be shifted, it will be direct taxation, like your income tax. If government asks you to pay, you have to pay. If the taxation burden can be shifted to another person, like I shifted to the end user, which is you, then it is going to be called as the indirect taxation. GST will all fall under the category of indirect taxation. Right? I've just given you one example of these two major types. Now I am going to tell you all the types of taxes under the direct taxes and under the indirect taxes. Are we clear up to here? Right? So we have learned what is tax, tax base, tax rate, proportional taxation, progressive taxation, regressive taxation, direct taxes, indirect taxes. If we are clear with all these basic terminologies and the concepts, now we are going to go and see the list of the examples of the direct taxes. Then we will see the examples of the indirect taxes. Right? So let us now see the examples of the direct taxes. Many of them you may be knowing on a day-to-day basis. Some of them may be new to you. So the first thing is the income tax. As we already said, income tax will be levied upon the people who are earning more than a minimum threshold level of income. So here we have said, like, anybody who is earning more than 2.5 lakh rupees in India, they will be levied with the income tax with the progressive principle. What do you mean by progressive? We already said, as the level of income is increasing, the rate of the taxation keeps on increasing. So if you are earning 2.5 lakhs to 5 lakhs, you may be paying 5%. 5 lakhs to 10 lakhs, you may be paying 10%. 10 lakhs to 30 lakhs, you may be paying 20%. Above 30 lakhs, you may be paying 30%. So they keep on increasing the rates, they keep on changing the slabs. So we call all of these ranges as income tax slabs, right? Sometimes they may also keep these rates and the slabs different for the women, and they can keep it different for the senior citizens. So every budget, they will come up with the newer policies, which we have to see. And you should also keep observing for the threshold value. What do you mean by threshold value? Earlier they said, like, all the people who are earning more than 1.5 lakh rupees, you have to pay the taxation. Then they made it into 1.8 lakhs. Then they made it into 2.5 lakhs. So now for quite some years, 2-3 years, they have retained it as 2.5 lakhs. So when the government says, like, now onwards, whoever is earning only more than 3 lakhs should be paying the taxation. So they keep changing the threshold limits, which also you have to observe in every budget. Right? So what are all the things which you need to look at as data for income taxes? The threshold value, is there any relaxation for women, for the senior citizens, all those things. And sometimes they may also give you some tax savings. What do you mean by that? I told you anybody who is earning more than 2.5 lakh rupees, you have to pay the income tax. Assume that I am earning 4 lakh rupees per annum. So now my situation is, for that 1.5 lakh rupees, I have to pay the income tax to the government. But government is going to tell you certain ways in which you can do some savings. What do you mean by the savings in certain ways? Maybe you are buying some small saving schemes related bond from the government. Or maybe you are keeping some savings with the post office. Or maybe you are buying some LIC insurance. Or maybe you are paying the children fees, students' school fees, and some amount of rental allowance. So certain things, the government is going to say that if you are spending in a particular way, if you are saving in a particular way, maybe you are buying some Kisan Vikas Patra, you are buying some farmers, agriculture related bonds which the government is giving. So if that 1.5 lakh rupees, whatever above the 2.5 lakh rupees is being spent or saved in a particular way, as the government is suggesting to you, for that particular amount, you don't have to pay the income tax, right? So this amount of incentive for savings, that will also be announced in the budget. They'll say like up to 1 lakh rupees, you can do some tax savings if you are spending or saving in a particular way. So that amount also you have to keep watching along with the budget presentation. Have you understood all the aspects of the income tax? Are we clear on this? So you need to look at the rate, the threshold, special concessions given for women, senior citizen, what is the incentive, the tax savings incentive which the government is announcing. With all these details, we have to understand the income tax every year. Right? Now we will see the second type of the direct tax, which is called as the corporate tax, or we want to call it as a corporate profit tax. Right? So this corporate profit tax will be a type of threshold, means minimum amount. I told you 2.5 lakh rupees as one of the threshold examples, right? 1.5 was one threshold. Threshold na in the minimum amount mela sambadikadum. It's like one the standard amount of income which the government will declare. Above this, if you earn, you pay income tax. Otherwise, you don't pay. If you are earning less than 2.5 lakh rupees per annum, you don't have to pay because you are lesser than the threshold value. Right? Now we will say what is this corporate profit tax. Corporate profit tax is levied upon the profit run by the business or the company, right? And it is proportional taxation. What do you mean by proportional taxation? Whatever may be the level of income, you pay a particular percentage of your profit as a taxation to the government. How much is that? For the domestic companies, it is 30%. For the foreign companies, it is 40%. This 30%, the current government, they said they will bring it down to 25% by reducing 1% every year. This they had promised when, like, along with their the agenda for the coming to the government. So slowly this percentage is getting reduced for the companies. So they have said like 30% is the usual rate. If some company is earning like 100 crores, 30% of this 100 crores, they will have to give it to the government in the form of profit taxation, right? So that is the calculation for the proportional taxation, corporate profit tax. But you are also seeing one particular word called as MAT along with the corporate profit tax. So for the MAT, we have also given the description minimum alternative tax. What do you mean by this minimum alternative tax? Assume that there is a company which says that it has not earned any profit at all. So only when they earn the profit, out of that particular profit, they will be giving 30%. Suppose a company is earning 1 crore rupee as the profit, then 30 lakhs from it will be paid in the form of the corporate profit taxation to the government, right? Assume a particular company is saying, I'm earning 1 crore, I have spent 1 crore, so I don't have a profit. In that situation, the government wants to collect something called as the minimum alternate taxation, right? The government started facing challenges when Reliance kind of the company started saying that I'm not earning any profits. Who will believe that if Reliance kind of a company is not earning the profit? So what they did was, assume there is a company A, it will be registering under the Companies Registration Act. When you register yourself as a company, when you are presenting your numbers, the profits, all those details of your company, you have to give certain accounting details like balance sheet, profit and loss, assets and liabilities. Have you heard about all these terminologies? If I'm running a company, I have to give the balance sheet. I have to tell how much I have earned, how much I have spent, whether there is any profit, whether there is any losses. So I have to present a particular accounting system. Now, when we are presenting that accounting system, we will be arriving at a word called as book profit. You heard the word book profit. You write it. This is usually what the companies do when they are completing their accounting system in a particular year. So, after arriving at the book profit, then you go to the Income Tax Act. In this Income Tax Act, there will be some more deductions which will be allowed from your book profit in order to arrive at the word net profit. Right? Assume that I'm a company, I have arrived at the book profit. I have announced that I have like 1 lakh rupees as a book profit. Then I have taken a loan for some expansion activity of this company. And then I am paying some EMI and there is some interest portion also into it. So I am paying maybe like around 50,000 or 75,000 as a interest or the EMI for the loan, whatever I have taken. So what the Income Tax Act will allow you to do is from this 1 lakh rupees, you can minus that 75,000 rupees. So finally, what will be the net profit? It will be only 25,000 rupees. So it is enough if you pay the taxation for the 25,000 rupees and you don't have to pay the taxation for the 1 lakh rupees. So when the Reliance kind of the companies declared that the net profit is zero, government went to this book profit and it asked something like you pay 18 to 18.5% as the minimum alternate tax. We heard? Have we understood? It is okay that you have not earned any net profit. I understand that you have earned only zero profits. But even if you show that you have earned only zero in the net profit, I will come back to your book profit, and from the book profit, you give me 18.5% as the profit taxation. So this is a calculation which goes for the minimum alternate. So that's about the second type of major type of the direct tax. Now we are going to see the concepts called as the surcharge and the cess. Are we clear whatever we have said so far? Shall I go ahead? Corporate profit tax on the undistributed profits. Yes, if you make a profit, you have to pay corporate profit tax. After paying the corporate profit tax, whatever is left behind in your hands, you can set aside some amount as undistributed profits. Right? So we'll go ahead with the two concepts called as the surcharge and the cess. Right? So we have said two major types of indirect direct taxes. One is your income tax, another one is the corporate profit tax. Now we are going to tell some additional concepts, or let me call it as a complementary concepts of the income tax and the corporate profit tax. First, the surcharge. When will surcharge come into picture? The surcharge will come into picture when I'm earning very high amounts of profits. Say for example, a company is there, it is making profits for which it is paying the corporate profit taxation. I'll tell you a number. You can do some simpler numbers into your mind. Assume a company is earning 1 crore rupees. If you are saying it is a domestic company, how much should it pay as the corporate profit taxation to the government? 30%. How much is this 30% of this 1 crore? How much is it? Somebody? 30 lakhs. right? So 30 lakh rupees you have to give to the government. Now I'll ask you another example. Assume a company is earning 10 crore rupees as the profit. How much should it give as the taxation to the government? 10 crores, 30 percentage, 3 crores, right? Now the government is going to tell all the companies which are earning 10 crores or above should pay 10 percentage of the taxation to be paid as a surcharge. What is the meaning of this? 10 crores is the total profits. 3 crores is the 30 percentage taxation what we have to pay. How much is 10 percentage of the 3 crores? Anybody? No. Don't get into 10 percentage of 10 crores. I'm asking you 10 percentage of 3 crores. 30 lakhs. Right? So you will be paying 3 crores 30 lakhs instead of just paying 3 crores. You are improving a bit more of the payment of the taxation. You are making the proportional taxation into a bit more progressive. What do you mean by the word progressive? If you are earning more, you have to pay more. But corporate profit taxation being a proportional taxation, the meaning of that is whatever may be the level of the income, we said the tax rate is going to remain the same. But now we don't want it to be same because I see that you are earning very high levels of income like 10 crores and above. In that case, I want you to pay a surcharge. What is surcharge? When you are earning a very high level of income, the level which is described by the government, then they put you one additional percentage of the tax rate, which is to be levied upon the taxes to be paid. It is not upon the tax the base. What is the tax base? Tax base is that 10 crore rupees. We are not going to ask 10 percentage of 10 crores. We are going to ask only 10 percentage of the 3 crores, which is the tax to be paid. Purinjada? Everybody understood? Manasalaya? Arthamaika? Gotaika? Yes? If you are clear with this, we will have to again tell this for cess in a different way. But as of now, what we are telling is surcharge will be levied when we see that when we have very high levels of income earning, government will come to picture, it will put a number. If you are earning 10 crores and above, you pay me 10 percentage on the taxes to be paid. Right? So we have said that 10 crore a company is earning and 3 crore is the tax to be paid, and the surcharge will be levied upon this 3 crore and it will become 3 crores and 30 lakhs. 3.3 crores will be paid as the profit taxation instead of the 3 crores. Done? Now we will move on to the second concept, which is called as cess. Surcharge can be introduced anytime. In the budget, they will say like who has to pay the surcharge, how much will be the rate of the surcharge. They will be saying companies, it can be levied upon the individuals also. For individuals, if they say like anybody is earning 1 crore and above per annum. Now we were discussing about like 2.5 lakh rupees is a threshold. So sometimes there are individuals who are earning 30-40 lakhs per annum. There are different amounts what the individuals earn. If an individual is earning 1 crore and above, then we can say that he has to pay 10% on the tax to be paid. Say for example, one individual A, he is earning 1 crore and above. First for that 1 crore, he will have to pay 30% as the income tax rate. So 30 lakhs he will have to pay. Upon the 30 lakhs, they will be levying another 10%, which will become like 3 lakhs. So 33 lakhs he will be paying instead of paying 30 lakhs. So that's how it will work upon the individuals also. right? So that's about the surcharge. Now we are going to say the next concept, which is called as cess. What is this cess, right? Cess is going to come for an earmarked objective. What do you mean by earmarked objective? They can call it as primary education cess, or they can call it as Swachh Bharat cess. They can call it as primary healthcare cess. So it will come with an objective. Fine. It is levied for an objective. GST says, yes. Upon what is it levied upon? Similar to this, assume that you all have paid us GST, right? We collected 1 lakh rupees as the fees, and 18% of this 1 lakh has to be presented as the GST. To this 18,000, sometimes the government will say that you pay Krishi Kalyan cess, you pay Swachh Bharat cess, 5%, 8%, some percentage they will say. So if I say 5% as the Swachh Bharat cess, this 5% will be going upon that 18,000 rupees, and it won't go upon that 1 lakh rupees. Same principle like the surcharge. So you pay 1 lakh, 18,000 will be taken as the GST format. From that 18% or that 18,000, we will have to calculate this 5% as the Swachh Bharat cess and add that, and then that is what is to be given to the government, right? So cess will be called as tax on tax, like the surcharge. But surcharge will come into picture only when you earn a very high level of income. Cess is not like that. Even upon a 10 rupees pen, the government can levy Krishi Kalyan cess, primary healthcare cess, or Swachh Bharat cess. So on any amount, cess can be levied. Cess will be levied upon the tax to be paid, like how we discussed about the 3 crores, how we discussed about the 30 lakhs. Now how we have discussed about upon the 18,000 it will be levied. So it is a tax which is levied upon the taxes to be paid. That is why it is called as tax on tax. Conceptually, surcharge and the cess, they remaining the same. Surcharge comes into the picture only when a huge amount of profits or huge amount of income is being earned. Whereas cess will come anytime. Cess can be introduced at like in any budget. They can say like, we want to collect this money for this particular purpose. And the beauty of the cess is that the moment you say that it is being collected from the primary education cess, it can be made use of only for that particular purpose. It cannot be made use for any other purpose. So it comes with an objective, it comes with a purpose. And that's what is cess. Cess can be levied both upon the direct taxes as well as indirect taxes. We are only giving here as part of the direct taxes. It can be levied upon the income tax, it can be levied upon the GST. Any type of taxation they can levy cess. Cess is also like tax on the tax, right? The rates can be deferred, the introduction can be deferred, the naming, the objective with which they are introduced can also be differing, right? I hope we are done with the surcharge and the cess. Now we are moving on to the other types of taxation, securities transaction tax, right? What do we mean by securities transaction tax? This is levied upon the share market transactions, right? We are going to learn as part of our class the share market, the capital market also. I am sure you would have from the newspaper gathered some information about Bombay Stock Exchange, National Stock Exchange. You would have heard about the word Sensex. All those things we will study in another class. Now, what do we understand about the share market? There is a company A. It is selling the shares for the first time. We call it as initial public offer, right? Is there anything like tax base for surcharging? Yes, tax base for surcharging is when a company is earning 10 crores and above, that becomes, those companies which are earning 10 crores and above will become the base for the surcharging, right? Those individuals who are earning 1 crore and above will become the base for the surcharging. Government has not spent the cess, the amount and the purpose for which it was set up, and it is moved to the consolidated public fund. Yes, if the government is doing some mistake on the particular purpose for which it is not being spent for, then you can see consolidated public fund is the fund where all the revenue of the taxes of all the types will be kept at. So they have said, like, if you have not spent the cess, don't waste the money, you just move it into the total treasury of the government, which we, there are two types of funds. I'll tell you as we go to the debt concept. This is the consolidated public fund. Then we have public accounts of India. There is yet another fund, there is yet another division. Contingency fund is totally different. We are not getting into that. The routine things are consolidated public fund and the public accounts of India, those two things. So this is, assume that I have told you about the treasury. There is a Gajana, right? In the Gajana, there are 2-3 different layers. The one major layer is the consolidated public fund. Income tax comes, you go and keep it there. GST comes, you go and keep it there. But we were keeping the cess of this GST or the income tax separately so that we can spend it for that particular purpose. If it is not being spent for that, then they are saying you come and keep it in the first layer itself so that I can spend it for something else, right? Base and the threshold are the same. Yeah, almost like, we can't say like that. Threshold means, let me say, assume that in this classroom there are 100 people, okay? If you talk about the income tax base, let me identify 50 people who are earning more than 2.5 lakhs. So this 2.5 lakh rupees is a threshold, and these 50 people, all of them will form the base, okay? So it's like a standard line above which, but I can't say that all the 50 people will be earning the same income. The tax base, they may be having different income, all the 50 people. So please understand that the threshold is the limit above which you start calling somebody as a base, and that base can be different in their earnings. So that will be the difference, right? So we go ahead, otherwise we're getting actually slowed down. Now we are actually talking about the securities transaction tax, which is regarding the share market dealings. Assume that a company is selling the shares. So I have bought the shares. From me, you are buying. So from you, somebody else is buying. So the share is moving on from person to person. A is selling to B, B is selling to C, C is selling to D. Whenever this kind of a transaction is happening between A and B, right, I'm selling the shares of the company to you, and then I'm taking the money, you take the shares from me. These kinds of transactions are there. We call it as the securities transaction. We are calling it as a shares transaction. And some minimum percentage of the value, what we are earning out of this, we will have to pay it as a taxation, which we are going to call as a securities transaction tax, right? STT. When we get into the capital market, we'll also get to know there is some other terminology called as commodities market. What do you mean by commodities market? Like how you are buying and selling the shares, you can also buy and sell commodities. What kind of commodities can we buy and sell on the platform? Now there is a lot of issues going on in the country with the agricultural commodities. Of course, you can buy and sell rice, wheat, jute, kind of commodities in it. You can buy and sell the gold, metal, copper, natural gas, liquefied natural, that LNG thing. So there are varieties of things, commodities which you can buy and sell on the platform. In that case, there will be a taxation levied upon the commodities transaction, which will be called a CTT, commodities transaction tax. So to the value what you have earned, you are paying the taxation in this transaction. In that case, it will be called as the direct taxes, right? Securities transaction tax, STT, CT, commodities transaction tax, they are all types of direct taxes, right? Now we will say what is fringe benefit tax, right? Assume that I am a company, I am giving a salary to people, I am telling them I will give you salary of 20,000 rupees, but I have a community in a place like inside my company. I have some place around my company. I have a bigger compound wall. You can come to my swimming pool and make use of it. I have a medical shop inside the thing. You can buy some medicines and then you can get the bill reimbursed. And there is a gym over there. You can make use of it. All those things, right? Securities transaction tax will be upon the value, right? You may be earning the profit, you may be earning the losses, but upon the value you will have to pay 0.1%. It's a very meager amount, but you will have to pay it, right? Now coming back to the fringe benefit taxation, I am giving you fringe benefits as an employer. You are the employee. I agree to give you 20,000 rupees as a salary, but I allow you to enjoy certain privileges, the fringe benefits. If you put a monetary value to those kinds of benefits, maybe it is adding up to another 10,000, right? I'm telling you to buy medicines and I will reimburse it from the, like if you give me the bill, and I'm asking you to make use of the gym, the swimming pool, all those things. So maybe I am giving you another 10,000 worth of the fringe benefits, right? Now, if I had actually given that amount into your hands without doing this reimbursement kind of a thing, I should have given you 30,000 as a salary, right? If I give you 30,000 as a salary, you may have to pay a higher income tax to the government. But because I'm giving you only 20,000 as a salary, the taxation payment to the government actually becomes lesser. I'm just giving you all of these things as hypothetical numbers. Don't multiply and see it for 2.5 lakhs and say that this will not come, that will come. I'm just telling you as an example. So if I give you 50,000 as the income, you will have to pay higher taxes. But I am giving you only 40,000 as the income, and then you are paying lower taxes because the 10,000 rupees I'm giving to you in the form of fringe benefits. So the government kept on telling the employers, don't do this. If you do this, I am going to charge you 30% of the benefits what you give as the fringe benefit taxation, right? So that's how they were trying to bring it under control. They did implement it, and at a certain point of time, by like 2010, they abolished this fringe benefit taxation also. But you need to know that there is a type of taxation called as a fringe benefit taxation, which is a type of direct taxation. Fringe benefit taxation will be paid by the employer. Right? So fringe benefit taxation is a tax which will be paid by the employer, right? So that's a type of taxation, direct taxation. Now we will see the other types of direct taxes, which is wealth tax, gift tax, estate duty, and all these things. And we have given a common nomenclature for all of these things as paper taxes also. What is this wealth tax? To the amount of the property or to the amount of the wealth which you are holding, you may have to pay a particular percentage. There will be property taxation which we are paying in every quarter. Who are all holding the property. So that will be a type of direct taxes. And when you're talking about the gift tax, assume that I am giving you one diamond necklace, and if it is of a high value, they are going to say that the person who is receiving the gift should declare that they have received the high valued gift, and they have to pay a percentage upon the gift as the gift taxation. So the liability is upon the receiver of the gift, right? If I am giving you the gift, and if I am like very friendly with the person to whom I am giving the gift, I can pay the taxation also for them. But the liability, the original liability actually lies with the person who is receiving the gift, right? So that's the gift taxation. As you are seeing there, we have written all of these things as paper taxes, mainly to tell that actually we are not collecting a bigger amount of these things, mainly because who is going to declare that they have received such a valuable gift, right? So the declaration itself is a problem, and therefore paying of the taxes will also become a problem. So they don't actually collect much amount and all in these types of taxes. And now we are seeing another word called as estate duty. Even before telling this estate duty, let us tell one more type of tax, inheritance tax. Assume the parents are writing off a will and then they are transferring the property from them to the children. At that time of handing over of the property, they will have to pay a taxation which will be called as inheritance tax, right? After which they will start paying the property tax. Once the property comes in the name of you, then you will start paying the taxation called as a property tax. So this is the inheritance tax. This is like from your grandparents giving to you or your parents giving to you, it gets transferred to your name, and then at that time you pay the inheritance tax, and then from then onwards it is the property tax. Sometimes there can also be a situation, assume that there is a couple and they don't have children, but they have lots of properties. So they are declaring their brother's son or a sister's son as their legal heir. What do you mean by legal heir? Varisudara. So who is to take my properties? They don't have children of their own. They don't have the routine heir, but they want to adopt and then give to somebody else, make somebody else as the legal heir. In that situation, if they are writing the property to the other people, so that at that time, the person, assume you are inheriting the property from your uncle or aunt. In that situation, you will have to pay a tax which is called as a estate duty, right? Like the inheritance tax. Inheritance tax comes directly from your parents, grandparents, whereas the estate duty will come from the another couple or another relatives, right? So, but all of these taxes are like very, very minimal amount, and they are not collecting much value to the government, and therefore they are all being written as the paper taxes. Estate duty is not there now; it's been abolished. Fringe benefit taxation is also not there now, so that has also been abolished. But these are all the types of taxes which you need to know, like as the major or the famous types of direct tax, right? So now to list down all the types of direct taxes. For the gift, already the owner would pay the GST when the receiver is levied. Yes, I will buy the diamond necklace. You know that when we are buying this precious metals and all, the rate of the taxation will be very less. It will be lesser than 5%, 1%, 2%, because the metal itself will be very costly, right? In that case, assume that I'm going to a jewelry shop and I'm buying a diamond jewelry by paying the GST 0% or 1% or 2%, and I come and gift it to you. Once you have received it, you have to declare that you have received the gift, and then you have to pay the taxation to the government. Of course, nobody declares, which is why it doesn't actually earn any revenue to the government, right? So to list down all the major types of the direct taxes: income tax, corporate profit tax, minimum alternate tax, two additional concepts called as surcharge and cess. Then you have the securities transaction tax, commodities transaction tax, fringe benefit tax, wealth tax, gift tax, inheritance tax, estate duty, right? So all of these things, Sodexo coupon, yes, that is also to be taken as a fringe benefit. Yes, you can take it as a fringe benefit. And one more type of the taxation also can be remembered by you as a type of direct taxation. What did I do? Hmm. So interest tax. What is this interest tax? I hope you're all familiar with the concepts of fixed deposits, recurring deposits, and all being kept with the bank. Whatever the interest, they may agree to pay like 7%, 8% per annum. So if you keep 100 rupees, they may be giving it back as 108 rupees towards the end of the year, one whole year. So that's the 8%. So to that 8% interest, what you have earned will also be charged with the taxation. So that will be called as the interest tax. For the gift tax, the person who gives should also pay tax, and the person who receives also declare and pay. The taxes are seeming to be duplicating. Yes, it is. It is because when you are saying gift, see, whatever the good or the service, the general rule in the economy is whoever is enjoying the benefits of a particular good or the service, they should be actually paying the taxes. So for buying the gift, these kinds of, see, not for every gift we are going to ask them to pay the gift tax, only which are all high value. Usually it will be the precious metals for which the rate of the taxation will be less. Probably the gift taxation rate can also be less, but still they want us to pay because they are enjoying the services totally like free, because it is coming only as a gift to them. They're not spending anything upon it. So they have to at least pay a percentage of the value of the gift what they have received. So whoever is enjoying the good or the service, they have to pay the taxation. That's the rule generally which is levied for the taxation. So consuming person should be paying the taxation, right? So I was mentioning about the interest tax. Interest tax is for the rate of interest what you are earning by making your money depositing in the banks in the form of the fixed deposit or the recurring deposit. So that income is also considered as an earned income. So to that earned income also you have to pay a particular percentage as the interest tax, right? And have you all heard about the word TDS? TDS, which is tax detected at source, right? What do you mean by the tax detection at source? We said like you have to pay the income tax out of the salary and other things, right? If company gives accommodation to the employees, then we'll have to pay fringe benefit tax, right? Now the fringe benefit taxation has been abolished. Earlier, of course, if they give them accommodation, if they give them privileges, benefits, they had to give. Now they don't have to pay any taxation for it. Okay, coming back to TDS. TDS is tax detection at source. What we are saying is, assume that your salary is 3 lakh rupees per annum. First 2.5 lakh rupees, you don't have to pay the taxation, right? For the rest of the 50,000 rupees, assume that you have to pay something like 5% of the 50,000 rupees. And maybe you have to pay 2,500 rupees. For convenience sake, let me make it as 5,000 rupees. This 5,000 rupees, you don't have to pay fully towards the end of the year. End of the financial year will be March month, so they'll expect you to pay the taxation by then. Instead of that, I will divide this 5,000 rupees by 12 and then I will be deducting this amount from the salary every month. So tax will be deducted at source. So that is also a type of the income tax which you can assume. Your income tax only, that income tax, instead of being paid as a bulk one towards the end of the financial year, you can pay it as a smaller amounts every month, and the employer, we will deduct that taxation from your salary and we will give you the money. So that is TDS. Wealth tax is anything which you hold as a property can be called as a wealth. And they will also say like a particular amount of gold you can hold as the wealth. Suppose if there is a person in a family, 500 up to 500 grams, they will allow you to hold as a gold, inherited, all these dowry and all those things. But if you are buying more gold than the 500 grams, it will be taken as a wealth and you will have to pay some percentage of the value of that gold as the taxation. Who is going to declare all these things and pay the taxes is a different, entirely different question. But wealth means, let us say, one major wealth at least which you can visually see, which is a property, right? If you hold a house or the property, you will have to pay the taxation once in 3 months. So that will be called as the wealth tax or the property taxation. TDS is nothing but the income tax what you are paying towards the end of the year will be split as the monthly income tax, and that will be deducted by the employer itself. Actually, you have to pay the income tax for the income what you have earned. Instead of you paying it, we will collect it in the form, we will deduct it from your salary and pay it towards your PAN number. I hope you all know what is PAN number, permanent account number, which will be there with the government. You have to take the PAN card. Assume that you are working as a faculty with us. We pay you 40,000 as a salary. We know how much you will have to pay the taxation towards the end of the year. It is not an indirect taxation. I am not paying on behalf of you. Of course, I'm paying on behalf of you, but it is only your money. I'm not shelling that money out of my pocket. If I'm giving you 40,000 rupees as a salary, I will catch hold of 4,000 rupees from it. And that 4,000 rupees, I will pay it to your PAN number. So it is like you paying to your PAN number, but it will be called as tax detected at source. Source means I am the source who is giving you 40,000 rupees as a salary to you because you are working as a faculty with us. But instead of you going and paying to your PAN number, I will do it from my side. And it will be reflected into your PAN number. It is only your money I am paying into it. I am not shelling money out of my pocket. Right? So TDS is not indirect, TDS is direct. Right? So is there any other doubt, or shall I go ahead to the types of indirect taxes? Indirect taxes, shall I proceed? Okay, just give me 1 minute, 2 minutes of time. I'll just have some chai and then I'll get back. So those are the types of direct taxes what we have seen so far. Now we will see the types of indirect taxes. Right. So when we are talking about indirect taxes, we've already said shifting the burden of taxation on somebody else, and we are having three major types of indirect taxes: excise duty, customs duty, and service tax. Right. All of these three things is now being called together as GST. We'll come to GST in a few minutes. First, we need to know a bit about the basic, these three different types of taxation, how it evolved and came so far. Then we will go ahead to the combined format of these three types of taxation into GST. Right? So first we will see the three basic types of taxes basics. The first one is excise duty. Excise duty will be levied upon all the goods which are manufactured in the country. Right? You are all now familiar with the words imports, exports, and all those things. Whatever it is, within the boundary of the country, if you are producing a particular commodity, for the commodity, whatever you have produced, commodity alone. I'm not talking about the services. For the services, there is the third type of tax, service tax. So for the commodities, whatever you are producing within the boundaries of the country, you're going to pay something which is called as the excise duty. Right? So now, the word what we said, exports and the imports. For that, you are going to levy a second type of taxation, which is called as the customs duty. Right? So when you say customs duty, usually we don't want to levy the customs duty upon the exports of the commodities. Why we don't want to levy the taxes? Because when you export, you're going to get dollars, you're going to get foreign currency. In order to promote the exports, the government is not levying taxes upon the exports. But when you are importing a particular commodity, the government will levy that customs duty upon it, which the peak rate you will have to see from the budget. So the budget says 10% is the peak rate for the non-agricultural products. The meaning of that is anything which is not an agricultural commodity, if you are importing it from some other country, you have to pay 10% of the value of it as the customs duty. Now your mind will be working. What if this is a raw material and I take it and I make use of it for producing the commodity inside the country? Should I have to pay the excise duty after that? Yes, you have to pay. Right? So now customs duty, it can be upon the raw materials, it can be upon the end user products. Assume that you are importing some luxury car, right? Now what we have written here, 10% is the rate for the non-agricultural products. So if you are importing, say for example, Lamborghini, right? A luxury car, which is worth of like around 2 crores, 3 crores. Maybe I'm telling it a bit lesser. Now what the government will do, is it going to levy the same 10% upon it? May not be. Sometimes it will say that I will levy 100% on the luxury commodity. So if you are buying a Lamborghini for 3 crores, you will have to pay the customs duty as 3 crores. Right? So the rate is going to be differing depending upon the situation, depending upon the commodities, what you are importing and other things. Right? So this is the standard rate what they will be announcing. And similarly, for the agricultural commodities, the rate of the taxation can be again different. Sometimes they may levy heavily. Sometimes if they feel like it is an essential thing which you are importing for the agricultural thing, then they may not be levying the customs duty. So depending upon the situation, depending upon the nature of the commodities, the rate of the taxation will be decided. But in general, they'll have a rate which we will say which could be the maximum rate for the non-agricultural products, which can be 10%, 15%, all those, right? So customs duty is for the goods which are being exported and imported. Excise duty is for those commodities which are being manufactured and consumed within the country. And services tax is the third type, which you're going to say that for the services which are produced and consumed within the country. Usually when you are exporting the services, you are not going to be taxing it like how you are saying for the goods, right? This is the general introduction. For every type of taxation, we have lots of like historical things which we'll have to say. Historical means some background details which we need to know before combining all of these things into GST. Customs duty, of course, we are going to discuss it when we are going to the last topic or the later chapter called the external sector. All we have said about is customs duty is like it is being levied upon the imports and it is not being levied upon the exports. And there are certain rates. Sometimes the rates are differing depending upon the nature of the commodities. This much of information is sufficient to finish this particular topic, which is upon the public finance. This is basically to give an idea how the government is earning the tax receipts whenever a commodity is being imported inside the country. That much we are telling here. The further details of like how do we look at this customs duty, is it good or bad or anything else, that will be discussed under the external sector class, which is the later class. Depending upon global demand and demand of India, customs will differ. Its demand means it depends like basically we define the commodities as necessities, luxury, all those things. So that will be the kind of the commodity differences upon which the rate of the customs duty will also differ. Either it will be generally taken as agricultural and non-agricultural, or it will be taken as necessities and luxury. So these are all the base upon which the customs duty will be different, right? So more about the customs duty we are going to learn when we are going towards the last topic on the external sector. So this we are excise duties, I will tell you now. I just told you about the customs duty. So this I am reserving for the later class on the external sector. We will go more detail when we are going to study the class on the external sector. So now our concentration is on the excise duty and upon the services sector. These are the two things which we are going to study now, right? What is this excise duty? We have already defined it is on the manufactured goods, right? So how did we levy the taxes upon it? How are we doing it right now about it, right? So when you are talking about this excise duty, you all would have heard about the word VAT, right? What is VAT? Value added taxation, right? And you would have also heard about the word sales tax, right? What is the meaning of these two different types of taxes? We'll say, assume that I'm a producer, I'm producing this pen and I am selling it in Chennai. I produce in Chennai and I'm selling it in Chennai itself. So when I am producing and then I'm putting a price for it, then at the point of the sales, I'm selling it in a shop. At the point of the sales, I put up a shop and then I sell it through the shop to you. There is a sales happening. At that time, I put a tax which is called as a sales tax. So upon this, say for example, it is 10%. So if this is 10 rupees pen, 10% 1 rupee. So 11 rupees will be the amount what I collect, and that 1 rupee I pay to the government. This is sales tax. Assume that I don't put up a shop and sell this. I give it to the wholesaler gives to a retailer, and the retailer is going to sell it. So every place that percentage of the taxation keeps on adding. I sell it to a particular person with 10% tax. That person sells it to another person with the 10% tax. So it's going on like in a cumulative way. The taxation gets cumulated actually. Price keeps on increasing. more number of people in between, the rate of the taxation by the time it reaches the consumer, it looks, or the price of the product actually looks higher. I hope I'm very simpler in telling things. You can assume like how it goes through a chain. Now we will come to this concept of VAT. 1986, India adopted this concept of value-added taxation. See, when we say India, we are studying actually about the central government and the state governments, right? Now I am going to tell you another key word when we are studying the types of indirect taxes. I hope you all have started with your polity classes and they would have introduced to you the word federal, right? Federal structure. Can somebody tell me like what is this meaning of the word federal? I'll tell you about GST. Please give me some time. Subsuming and all will come later. I will tell you. What is federal? First tell me. Division of powers, right? It is division of powers between the center and the state. You are dividing the power, political powers. That is what you would have studied in your polity class. What I am going to tell in economics classes, you are again dividing the power between the central and the state government. But this time your economic power. What is your economic power? Your economic power is collecting the taxes, right? So that's the revenue of the government. So central government and state government, they are going to share their powers in collecting the taxes from the people, right? So whenever I start talking about these indirect taxes, mainly there are differences between the central and the state government. And we are going to call this kind of division of powers in economics with the word fiscal federalism. You would have studied about political federalism. That is what you would have studied in your polity class, right? Now what we are teaching in economics class is fiscal federalism. I've already told you what is fiscal. It is like you are earning the money, spending the money. It's about the treasury of the government, right? So in doing this earning and spending, there is a fiscal federalism. There is a difference in power between the center and the state. So now what we are going to do is, when we are talking about the case of the excise duty, I want you to be consciously remembering about this difference of the powers between the central government and of the state government, right? I'm going to tell you about the background of the value added taxation introduction in India, which actually starts with the central government, right? So I told you, whenever a product is being sold, there will be a tax on it, which we call as a sales tax. This was the thing which we were following for several years. By 1986 onwards, the central government started following this VAT, but at that time, it called it as mode VAT, MOD. What is this mode? Modified. Why? What has been modified? Actually, this concept has been taken from the European countries, value-added taxation. How did we modify it? Actually, we wanted to levy this taxation upon the manufactured goods. So it could have been called as man VAT or mon VAT, referring to the manufactured sector, but they didn't name it like that. They named it as mode VAT, MOD VAT, modified VAT, because we didn't exactly adopt the concept of the European countries levying that kind of taxation. We modified it a bit to our situation. And how does it work? We need to understand this value-added taxation so that we can again relate it to the GST. I'll tell you the working of the value-added taxation. But before getting into that example, we need to understand one or two things about the VAT. Central government adopted it by around 1986 and then it called it as mode VAT. Then by 2000s, it called it as SIN VAT, central government's VAT, SIN VAT. Then slowly from like 2002 onwards, it started pushing the states to follow it. See, even when GST was introduced, do you think all the states immediately accepted to adopt GST and say, okay, we all will follow GST? That was not the case. Every state, they had their own apprehensions. They said like, We may be losing the revenue if GST is coming into the place. So will you give us compensation if it is required? All those things they kept on asking the center. Center agreed, yes, I will help you if there is in case of a loss of revenue, I will help you like for 3 years, for 5 years. Only after agreement of all these things, state governments agreed. So there is a federal structure, there is a division of power. So whatever the central government says, the state governments need not accept it immediately. They'll take time, they'll analyze, they will respond, they'll react, right? So in that way, at the time of this imposing of the VAT towards the state government, central government was telling, it was negotiating with the state government to adopt it. But state governments took their own time to do it. But from 2002, this process went on continuing. By 2007-8, the whole country was moving towards the concept of value-added taxation instead of the sales tax. And people, like they were all accepting to it. They understood that actually there is no revenue loss by moving to the sale, to the value-added taxation from the sales tax. So it was a good concept. So when we are saying so much about this value-added taxation, we really want to understand what exactly is making the central government pushing the state governments to do this, and why are so meritorious about from like consider meritorious over and above the previous system which was existing. So we are going to take some example and then explain to you. Then we come back to the presentation so that we understand the importance of the value-added taxation. I think in a board at the time. இதுலயே ஒயிட் போர்டு இருக்குமா? இதுலயே இருக்குமா? இது ஸ்டாப் ஷேர் கொடுக்கணுமா? க்ளோஸ் பண்றேன். திருப்பி போன் எனக்கு ஓபன் பண்ணிக்கலாமா? You're all able to see the whiteboard? You're able to see the whiteboard? Okay. Right, so whatever example I'm going to give you now, don't get into the concept whether the farmer will pay the taxation and other things. I'm just taking you through a chain of production activities so that we can understand this concept of value-added taxation as well as the concept of the indirect taxation. Right, I'll illustrate how the taxation actually works out. The value-added taxation, let us keep it as 10% rate, right? So now let us take a farmer. The farmer is selling the cotton to a manufacturer. The manufacturer converts it into a thread and colors it. He is going to make it into a colorful thread, colors it, dyes it, and gives it to a tailor. The tailor stitches this into a t-shirt and then gives it to a wholesaler. The wholesaler is going to do some packing, labeling, and then he gives it to a retailer. Say for example, Saravana's Foods is taken. Right? So the retailer is going to present it with advertisements and other things, and then is going to store the thing and then good presentation of the thing, and finally it goes to the consumer. The farmer sold the cotton for 100 rupees to manufacturer, right? 10% is the rate of taxation which is levied upon the whatever sales you are doing. So how much is this 10% of 100 rupees? 10 rupees. So he sells it for this particular price to the manufacturer. The manufacturer gives 100 rupees to the farmer and 10 rupees will go to the government. Everybody agreed? Have we understood what we have said so far? The farmer has produced cotton. He is selling it to the manufacturer. The cotton's value is 100 rupees. But when he is selling it for 100 rupees, he has to collect 10% of the value of it as the VAT. So he has collected the 10 rupees, but he gave the 10 rupees to the government. Done. Now what the manufacturer does is, I told you he is making it into a thread. He's dyeing it. He's making into the colorful yarn and other things. Okay. So he is adding some value to it, value addition. And it becomes a value of 150 rupees and he is selling it to the tailor. Right? So the tailor has to pay 150 rupees to the manufacturer and 15 rupees as the 10% value added taxation rate to the manufacturer. Now the manufacturer has to take that 150 rupees to himself and pay that 15 rupees to the government. Now the question is he going to pay all the 15 rupees to the government? Is he going to pay all the 15 rupees? Yes, no? You want to answer? Anybody? We'll wait. Okay. He is not going to pay all the 15 rupees. He will pay only 5 rupees. Why only 5 rupees? His value addition to the product is only 50 rupees. What is 10% of the 50 rupees? It is 5 rupees. So I have taken 100 rupees worth of cotton. I made it into 150 rupees worth of thread. So as a manufacturer, I have added a value of only 50 rupees. So now if I call the value added taxation to the value what I have added to the product only, I have to pay the taxation. So how much value did I add? 50 rupees. So how much taxation should I pay? 5 rupees. So that is what I have written here. So what will happen to the rest of the 10 rupees? I will take. Have you understood? Right? So the farmer took 10 rupees from me as a manufacturer and paid it to the government. I am taking 15 rupees from the tailor, retaining the 10 rupees with me, and then I have given that 5 rupees to the government. So both the farmer as well as me as a manufacturer, we have not like spent anything out of our hands in the form of taxation because we keep collecting it from the next person. Right? So this is also an illustration of the indirect taxation principle. Have you followed this? I'll proceed with the chain. You will definitely follow it. Now we can say that the tailor, he took this 150 worth of this thread and he stitched it into a t-shirt. Right? So he has added a value of 50 rupees. So now he is selling it for 200 rupees to the wholesaler. So the wholesaler will pay the 200 rupees to the tailor and 20 rupees. 10% of the 200 rupees is 20 rupees. So this tailor will take the 200 rupees to him, right? And in this 20 rupees, how much will he pay to the government? He'll pay only 5 rupees. Why he will pay only 5 rupees? Because he made 150 into 200 and his value addition towards the product is only 50 rupees. To the 50 rupees, how much is the 10%? It is only 5 rupees. Have you followed? Everybody? Now we will say the wholesaler adds a value of 25 rupees. Labeling, packaging. Number 6, shall we keep it commoner so that I need not write it as 22 rupees 50 paise and all. So I make it into 250 rupees. Right? So this fellow will be giving 250 rupees because he has added a value of 50 rupees to it and 25 rupees. And the wholesaler again will be paying only 5 rupees because his value addition to the product is only 50. Finally, the Saravana Stores wala, he makes some presentation, he sticks his own label and then he is storing it, he is presenting in a showroom in a very nice way, he does some value addition to it and sells it to the consumer for 300. His value addition, another 50. So the consumer will now pay 30 rupees apart from the 300 rupees. And again, how much will Saravana Stores wala pay to the government? That will also be 5. Because his value addition to the product is only 50. Right? So now let us tally the numbers. How much did the consumer pay as the taxation, value added taxation? It is 30 rupees. Right? And can you add all these numbers and see how much the government has actually received? How much is the total on this left hand side? 30. Are the numbers tallying? Have we followed here? We didn't follow. I think no. Why no? See, every stage what you have to calculate is what is my contribution to the product. To that value only you have to pay the taxation. So the manufacturer added 50 rupees. So he paid only 5 rupees. So he retained back that 10 rupees. Right? The tailor paid 15 rupees and he collected 20 rupees from the wholesaler. He paid 5 rupees and he retained back this 50 rupees. So every stage this person is collecting the taxation from the next person, paying to the government only to the amount of value added what he did to the product. The rest of the amount is getting reimbursed to himself. So the Saravana Stores person has sold the product for 300 rupees, but he has already paid 25 rupees as taxation to the wholesaler. So he is wanting the consumer to give the 30 rupees. So he will recover back the 25 rupees to himself and pay only the 5 rupees back to the government. So here the government is collecting the total of 30 rupees in bits and pieces. The consumer, whoever is paying 30 rupees, that is not directly going as 30 rupees to the government. Rather, this 30 rupees is going to the government as 10 rupees, 5 rupees, 5 rupees, 5 rupees, and 5 rupees. Right? So, at any one point of the time, this system is not doing a bill, which is very easy thing for the people to, like the sellers, they want to cheat the government, they can sell the commodity without the bill. Assume that the selling of the commodity happens only at the last stage, right? To the consumer. Assume that Saravana Stores is selling the commodity without the bill, the loss to the government will be only 5 rupees. Because it has already collected 25 rupees till up to the wholesaler thing, till up to the Saravana Stores thing, right? Saravana Stores paid 25 rupees to the wholesaler. And if he is selling this thing to the consumer without a bill, the loss to the government will be only 5 rupees. But the question is, why will Saravana Stores sell without a bill? Because he wants to recover back the 25 rupees what he has already spent in purchasing that t-shirt from the wholesaler. So he will necessarily give a bill to the consumer, take the 30 rupees, reimburse himself with the 25 rupees and then give that 5 rupees to the government. Have we followed? Was it clear? If you understand this, only then we can study GST. Otherwise, it becomes difficult. Friends, did we follow? Right? So, this is how the value added taxation helped to reduce, which is called as cascading effect. What do you mean by cascading effect? If you are in the sales tax regime, okay, the bill now, what did you say about the bill? The bill, what I'm saying is, assume that I am the Saravana Stores person, right? And this water bottle is another person who is the wholesaler who gave me the t-shirt. When I took the t-shirt from this person, I would have paid 250 rupees to him, and I would have also given 25 rupees to him, right? So when I give it back 25 rupees to him, now I have to sell to you. You are the consumer, assume, right? I am going to make some value addition to it, make it look neat. I put a box, I paste my own Saravana Stores label and all, and then I give the shirt to you. So I make a value addition to you, and then I give it to you at 300 rupees, right? So you will be paying 30 rupees. So now I have already given 25 rupees as taxation to the previous level, who is the wholesaler. So this 25 rupees I will have to recover whatever I have given to the previous stage, and this 5 rupees alone I am going to give to the government. If I don't make the bill, right, assuming that I don't collect the 30 rupees from the consumer, why will you not make the bill? Only to make it like not collecting the tax from the consumer. If you don't collect the 30 rupees from the consumer without making the bill, how will you recover back the 25 rupees what you have already given to the wholesaler in the previous stage? You wouldn't want to do it. You want the 30 rupees from the consumer so that you can recover back the 25 rupees to you and give only the 5 rupees to the government. So you would naturally want to make a bill and then take that money from the consumer. So which is why we are saying this value added taxation is making the producers to sell the commodities with the bill. That's one good merit of the value added taxation. And whatever tax I am going to pay will be only equivalent to the value what I have added. Can you follow? Value from the manufacturer to the tailor. Somebody is asking what's the sale value from manufacturer to tailor? It is 155 or 165. See, usually sale value means what you will do is you will add these two things. Is it not? 165. That was the concept which was there with the sales tax regime before. I told you sales tax was there, replaced by the VAT, right? So what will happen in the previous stage? The bill value will become 110, right? So it won't be taken as 100 rupees worth of cotton. It will be taken as 110 rupees worth of cotton. Then he adds 50 rupees along to it. It will become 160 rupees. So 160 rupees means 16 rupees of the taxation will be paid to the government. In that case, again, the taxation value will go into it. So it will be becoming like 165 plus 16 rupees. So everywhere what will happen is the taxation will get added to the value of the product. So that was actually called as the cascading effect. The taxation will also be taken as a cost. Basically, that's the meaning of it. So if that is happening, slowly the price of the commodity keeps on increasing because you're putting tax also as a cost into it. So that is now being removed here because value added taxation is telling you just pay the taxation to the value what you have added to the product. So that's the merit of this particular system what they adopted, moving from the sales tax regime towards the value added taxation regime, right? So this is one of the major benefits which the central government asked the state government to follow so that better revenue can be earned and the cost can also be contained. 300 plus 30 is the maximum retail price. That's right. 300 plus 30. 330 will be the maximum retail price. 30 rupees will be the taxation. But the 30 rupees has been collected not directly from the consumer as 30 rupees by the government. Rather, the 30 rupees has been collected by the government at different stages of the chain of the production, like the farmer, manufacturer, tailor, wholesaler, retailer, like that. Every stage they collected like some amount of the taxation. But whatever the consumer finally pays and whatever the government has collected should tally with each other, right? So that's the concept of value added taxation. So now we go back to the presentation. We try to amplify the share. Okay, so that's the story of the value-added taxation. What we have said, we have told about the merits of the VAT also. So the state governments initially had the apprehension whether this value-added taxation will result in loss of revenue, but slowly they understood that this was actually collecting more revenue than the sales tax regime. And by 2007, everybody started why the end retailer has to produce the receipt in the case of VAT. If they don't produce a receipt, they can't collect that 30 rupees from the consumer. If they don't collect that 30 rupees from the consumer, they won't be able to like recover that 25 rupees which they have given in the form of taxation already to the wholesaler. And then they have to pay that only rest of the 5 rupees to the government, right? So if they want to recover the tax what they have already paid to the previous stage, we have to make a bill. Only if they make the bill, they will be able to collect the 30 rupees as the taxation from the consumer. That's the importance why they have to make the bill, which is one of the merits which we look at for the value-added taxation, right? So so that's the merit of it. So by 2007-8, almost all the states started accepting the VAT as the concept. After which, slowly the government started pushing the concept of GST. GST is basically to combine all the three types of the taxation and present it as one unified taxation structure across the country. But even before going to the GST, we were saying three major types of taxation here, right? We said a bit about the customs duty. We have reserved a majority of it to the later chapter on external sector. Whereas when we talk about the excise duty, we have given some amount of the background, like how the excise duty was in the sales tax format, then it came to the value-added taxation format. I'm going to complete it with the GST format. Then we also have the services tax. I'll tell you about the services before we combine everything into GST, right? So services sector was supposed to be like levied with the taxes. You know, like the examples of the services sector. How does this tax levied through the sales tax, which had contributed to less revenue compared to VAT? Sales tax, they will be mostly evading with the bills. They won't be presenting the bills most of the time, just to escape from the taxation payment. But in case of the value-added taxation, because it is only to the value what they add to the commodity, they have to pay the taxation. People came forward voluntarily to pay the taxes. So that's the answer for the question. Now we will say a few things about the service tax before we combine everything into the GST, right? So services sector, as you all know, we studied in the first class when we studied the national income according to the product method. The economy is divided into primary sector, secondary sector, and the tertiary sector. We had lots of examples given to the tertiary sector or the services sector. If you recall back, some of the major services, we can say the IT services, BPO services, transportation, telecommunication, hospitality, hotel industry, education sector, health sector, business sectors, financial services, insurance services, real estate services, architectural services. varieties of services we are providing in the country, and all of these services, they have to be levied with the taxes. But the concept of levying the taxes on the services sector itself started from this 1994-95 budget, and the rate of the taxation was very, very minimal. See, after 2000s, you know, like the services sector has contributed a lot to the total national income of the country. You know, today, like 50 to 60% of the national income is coming from the services sector, which is what we have studied in our first class on the national income. So when you are expecting that the country is earning 60% of the income from the services sector, it is quite natural that if 100 rupees is collected as tax in the country, that 60 rupees should also be coming from the services sector, because it is the one which is contributing the major income to the country. But in taking as a surprise, the services sector has been levied with a very lower rate of taxation, as you can see, like around 5%, which started from 94-95. And the country had lots of difficulties in bringing this service tax into implementation, because identifying who is giving the services itself took a longer time for the country, right? First of all, the services sector should become more organized, right? If they register themselves as companies, if they put up their balance sheet, if they do all these organized business, only then you can go and collect the taxes from them. The services sector was much unorganized in nature, and still it is unorganized in nature, which is also one of the major challenges for the country to collect the taxes. So at one point of time, when the income from the services sector was coming as the major chunk to the country, services tax was at the rock bottom of about all the types of taxes which is getting collected in the country. So this was a statistical anomaly. Government was wondering, see, how one particular sector is giving income, but it is not giving me taxes. How is this possible, right? So that's how in every budget, if you see from this period 2000 to 2010, in the budget, the government will be announcing airport sector, they have to pay me this much of taxation. If there is a hospital with 30 beds and if it is with air conditioning, they have to pay this much of taxation. If there is a cinema theater, if there is a particular hotel industry with these many number of rooms and with the AC rooms, they have to pay this much of taxation. So it became a very huge task for the government to go and identify which are all the sectors which have to pay the services tax. So this kept on continuing. By 2010, the government slowly increased this. 1994, they introduced it as 5%. Then by 2010, they slowly increased the rate to 10%. Right? Rate also started to increase. Base also started to increase. They started identifying which are all the sectors which can be levied with the service tax. Number two, they wanted to increase the rate because the rate was almost like 5% for 15-20 long years. So they said slowly, let me increase it to 10%. Then after 11-12, slowly they increased to 12.5%. Then it became into 15%, right? Slowly they kept on increasing the rate, and like by 2014-15, what the government did was, it was like wondering how am I going to improve the collection of service tax, and then it said that I am going to identify some, see, assume that this particular classroom is the total services which is being provided in the country. I am going to say that these two people only will not pay the taxes, rest of all of them pay the taxes, right? So that was yet another reform which the government brought in, the policy which the government brought in. It was introducing a concept called as negative listing. What do you mean by the negative listing? I say only this particular service don't pay the tax, the rest of them all pay tax. So I announce only those who need not pay the taxes. Instead of me going and finding and say, you pay the tax, you pay the tax, you pay the tax, instead of identifying every single particular service who can pay the tax, I am just going to tell that 10 services in the country need not pay the taxes, the rest of all of them, you pay the tax, right? So government took lots of efforts and reforms and measures to find out who should pay the taxes, who need not pay the taxes, how much should they pay the taxes. With all of these reforms, so today the services sector's taxes collection is slowly improving. The rate also moved from 5% to 10% to 12.5% to 15%, and today we are paying service taxes 18%, right? And similarly, who are all the people who has to pay the taxes? Slowly they brought in one by one in every budget session, and now they only have a negative list. They'll say like education sector, you need not pay. health sector, you need not pay. So they're going to identify a few services which need not pay the services tax, and they're going to tell rest everybody, you all pay the services tax, right? So this is how the services sector, which is contributing the major chunk of the income for the national income, is slowly improving its contribution towards the taxes of the country. And services sector is now one of the major contributors of the indirect taxes in the country, right? So that's the summary of these three taxes. Now we are going to combine all the three taxes in the form of the GST. For time in the past, time correct time, 4:36. So we'll continue with this GST's introduction in tomorrow's class. 2 o'clock again we will start. It needs some time. I can't be hurriedly finishing in another 5-10 minutes. Please recall back the t-shirt, cotton sheet t-shirt example what I told you today. If you are clear in the calculation of that, tomorrow when we start with the GST, it becomes very easy for us to understand the GST in the form of CGST, SGST, IGST. I'm going to tell you varieties of GST tomorrow, and which are all the taxes which got subsumed into the GST. Everything we will discuss in tomorrow's class, and we'll continue with it. So today's class, we have started with the budget structure. We have said about the revenue account, capital account, the basic differences. Under the revenue account, we are talking about the receipts of the government, right? In the receipts, we have started talking about the tax receipts of the government. We have defined tax. We have said what is tax base, tax rate, what is progressive taxation, proportional taxation, regressive taxation. We have given you the difference between the direct and the indirect taxes. We have given you the examples of the direct taxes. We have also discussed the basic types of the indirect taxes. Now we are going to combine all the basic types of indirect taxes into one tax, which is called as the GST, which we are going to do in the tomorrow's class. If you have any doubts, you can message me. I've already left you with the mail ID, right? Thank you.
Awesome.